Congratulations guys, if you have held on to your Bitcoin until now. You have successfully weathered the longest bear market in Bitcoin's history, which saw a staggering 84% decline from the peak of its price to the bottom. It's been a tough journey with negative returns persisting for 490 consecutive days. The last record was a 353-day long bear market between November 2014 and October 2015, making you a true crypto survivor and still being in the game. Recently, Bitcoin ETFs have been making headlines.
Spot Bitcoin ETFs have been all over the headlines recently as Blackrock, WisdomTree, and others rush to file their own.
This move has had a significant impact on the market, causing Bitcoin to surge by over 82% this year. If approved, this ETF could attract billions, if not trillions of dollars in new investments, potentially leading to significant growth for Bitcoin. However, there's a catch. Before anyone can create ETF, they must file and get approval from the SEC, currently under the watch of Gary Gensler. The process and criteria for approval will play a crucial role in determining the future of the spot Bitcoin ETF. In today's video, we will dive into what the SEC is looking for and explore potential future of price movements for Bitcoin. So let's get started. Welcome to Cryptocat-Guru, your ultimate channel for everything related to crypto, NFTs and the metaverse. Today we are gearing up for the most significant and epic battle in the entire history of cryptocurrency, the spot Bitcoin ETF. In 2023, Bitcoin embarked on an extraordinary moonshot journey with a substantial portion of its gains achieved after June 15th. The catalyst behind the surge was the filing of an application for a spot Bitcoin Trust ETF by Blackrock, the world's largest asset manager. The very rumor of this prominent financial institution seeking an ETF had a profound impact on the price of Bitcoin. The key figure behind Blackrock's move is Larry Fink, who currently holds immense power globally. His public endorsement of Bitcoin as a technology has been a game changer, considering his previous viewpoint that it was merely a tool for money laundering. Now Fink is stating that Bitcoin is playing a crucial role in democratizing the world of finance and the evolution of digital gold.
I actually believe this technology is going to be very important. I believe the next generation for markets, the next generation for securities will be tokenization of securities.
The excitement surrounding Blackrock's filing is justified due to its remarkable track record of ETF approvals, with 575 ETFs successfully approved and only one rejected dating back to 2014. However, it's essential to keep an eye on the two critical factors that will determine the SEC's approval of the spot Bitcoin ETF, so stay tuned as we dive into what it will take for this groundbreaking ETF to receive the green light from the SEC. The primary requirement the SEC is seeking is the surveillance sharing agreement, which essentially means that a non-US entity must be willing to provide and share crucial information about market trading activities, clearing activities, and customer identity. This sharing of information should not be hindered significantly by the non-US entity's rules of secrecy. Essentially, it demands that even if a party is not legally obligated to comply with the SEC's regulation, they must still cooperate and provide all the necessary data. This data will be shared with the Nasdaq to enable a comprehensive study of Bitcoin's trading activities and the identities of the participants involved. Transparency is the SEC's top priority before granting approval for the ETF. The second major concern for the SEC relates to an issue that has been persisted since Bitcoin's inception. Yes, we are talking about insider trading.
Solidus Labs recently released the first part of the company's 2023 crypto market manipulation report with a focus on insider trading activity in the space.
Solidus Labs recently published the first part of its 2023 crypto market manipulation report, shedding light on insider trading activity within the crypto space. The findings were concerning, revealing that insider trading is more pervasive in the crypto world than previously believed. Looking back to 2021, the report discovered that over 50% of crypto token listings showed signs of insider trading. Specifically, more than 130 projects have shown evidence of insider trading, where individuals bought or held a large number of tokens before their release, only to later dump on the market, often on decentralized exchanges. This unlawful activity resulted in some individuals making illegal profits exceeding $200,000. Consequently, this increased insider trading activity has become a significant obstacle in gaining approval for the ETF. To combat this, greater transparency is required between wallet owners and their identities, especially as more people plan to include Bitcoin in their pension fund and retirement accounts.
Late last week, Blackrock and NASDAQ refiled, naming Coinbase as the custodial surveillance partner of the spot Bitcoin trust.
To address this problem, Blackrock and other hedge funds have selected Coinbase as a surveillance program partner. This move may prove advantageous for Coinbase as their stock has experienced substantial growth.
JP Morgan did say the moves to make Coinbase a surveillance partner for these funds has led to the, quote, bullish momentum of the company's share price in recent weeks.
At the beginning of the year, Coinbase stock was valued at around $33 per share, and it has risen to approximately $80 per share, representing a remarkable 135% increase. However, despite this impressive growth, investing in Coinbase remains inherently risky. JP Morgan, for example, holds the viewpoint that the majority of retail investors, including individuals like you and I, have already found ways to access and invest in Bitcoin. Hence, they argue that the approval of a spot Bitcoin ETF may not lead to a significant influx of retail money waiting on the sidelines. Similarly, despite the presence of Bitcoin ETFs in the form of futures, institutional hedge fund money hasn't flown into Bitcoin as anticipated. This indicates that the approval of a spot Bitcoin ETF may not automatically trigger a surge of institutional investments into Bitcoin. Thus, it's important to consider the risk associated with the approval or rejection of the ETF. If the ETF gets approved, there is no guarantee that Bitcoin's price will experience a substantial increase. On the other hand, if the ETF is rejected, there's a possibility that Bitcoin's price could plummet below $30,000 rapidly. On the flip side, you might have come across numerous insane predictions for Bitcoin if the spot Bitcoin ETF gets approved. While it's challenging to determine the accuracy of these predictions, one of the most compelling comparisons is with the history of gold. Consider the birth of the first gold spot ETF on November 18, 2004, when gold was valued at less than $450 per ounce. Within just 7 years, by 2011, the price of gold had skyrocketed to nearly $2,000 per ounce, representing a staggering 4.5 times increase. Gold serves as a relevant historical example, and in my opinion, I believe Bitcoin's price growth could potentially outpace even that of gold. One of the reasons for this belief is the sheer magnitude of assets managed by the companies applying for their own ETFs, totaling approximately $27 trillion. Although not all of this capital would flow into Bitcoin, even a small fraction, say 1%, could have a profound impact on its price. The ultimate question now is when we will receive the decision on the spot Bitcoin ETF's approval. This decision holds great significance for the cryptocurrency market and investors worldwide eagerly waiting to witness its outcome. Now let's take a look at the potential timeline for the ETF's approval. The SEC has 3 opportunities to extend the deadline, once in August, once in September and once in December. However, the final and definitive deadline for the decision is set for 23rd of February 2024. Coincidentally, this date is close to Bitcoin's next halving event expected in April 2024. Estimates for Bitcoin's price range anywhere from $35,000 to $45,000 per coin in 2024, which could become the potential floor price in theory. Should the spot Bitcoin ETF be approved, it might have a positive impact on Bitcoin's price over the long term, similar to the effect the ETF had on gold by making it more accessible to a wider audience. Nevertheless, as with all things in crypto and Bitcoin space, it's crucial to remain cautiously optimistic. The odds of the ETF being approved currently stand about 50-50, meaning the outcome remains uncertain. Therefore, it's essential to exercise caution. So please stay safe out there and see you until the next time. Bye bye guys.